I've said it a few times, you got to get used to like the daily kick in the bollocks and just shrug it off and carry on. I remember when I started out, I was working full time. I made the mistake of calling myself a project manager on our third or fourth project, and I got completely hung out to dry by the builder. I still think there was a little bit of imposter syndrome that I had to overcome, just not believing in yourself. I guess when you just, you're CAD monkey, you sat behind a desk, it's a lot different doing the drawings for other people to actually having the purse strings, having to deal with the trades, being 100% accountable for everything that goes on. Yeah, there's been a lot of blood, sweat and tears, probably more tears.
Welcome to another episode of the Property Developer Show, the podcast. Today, I'm joined by Anthony Boyce, who is a former architectural technician and now turned property developer as well as business owner. Anthony, welcome to the show.
Hello, thank you for having me.
So I know you've been on quite a few different podcasts. I know you've got good social media presence, but essentially for those that haven't heard of you, where did you start in property and what's been your journey to date?
Yeah, cheers. As you pointed out, I was an architectural technician or technologist. I've been doing that for about 20 years. It was around about 8 to 9 years ago, I got into property investment, started with buy-to-lets, vanilla, 25% down, and that was it. I built up a little bit of a portfolio and then jumped sort of two-footed into business ownership, started my own architecture practice. And that grew legs very quickly, I suppose. It was just before COVID, but I ended up in a position where we had about sort of 40, 45 staff at one point through multiple businesses. It was archaeology and heritage, there was ecology, construction. I even tried my hand at a social media thing just because, as you mentioned, doing all right at this social media thing. Yeah. So I'm one of them people who just has a try at a lot of things, really.
Mm-hmm. Yeah. If you throw enough shit at the wall, something's bound to stick.
Exactly that, yeah. You miss 100% of the shots you don't take.
Exactly. No, 1,000,000%. So in terms of like the property journey then, because I know you've got a fair few projects on the go at the moment, what kind of has been the sort of stages that initially got you into your first project? What did that sort of look like?
Yeah, so it was when I was employed, really. I started reading, the books, The Rich Dad, Poor Dad, and all that kind of thing. Like I imagine so many people read that and got started. And you just kind of thinking, well, what is there at the end of this? What is there for me? So that's when the penny dropped. And then I started, going to networking events, listening to podcasts like this, just educating myself and realizing I needed to take that leap. So it was a JV when we started. It was myself and an old college friend. We took the plunge, I say, about 8 or 9 years ago, just a very vanilla buy-to-let. And then steadily we've got sort of spicier and spicier deals, started with the back to bricks and then SA, HMOs and where we are now with developments and commercial conversions and new builds and things like that.
Amazing. So just on that point then, what projects have you got sort of rolling at the moment?
At the minute, I'm doing a grade 2 listed church conversion, which is, touch wood, about 2-3 weeks away from finishing. So that'd be great. That's 6 apartments we've managed to squeeze into that one. They'll be Airbnbs. We have a commercial conversion up in Northumberland, Northumberland, Wooler. That's 5 apartments and 2 commercial. Again, that's probably 3-4 weeks away from finishing. And then I'm doing a new build that was originally a Class Q barn conversion, reapplied for planning, got permission to knock it down. And we were going down the modular build route. To be honest, that one's been a bit of a pain in the arse. There's been a lot of chew with that, problems with the manufacturers and this, that, and the other. So that one will be finished this year, but we're just waiting on the next tranches of money to come on that one so we can get going again.
3 shots, 2 you get, 1 is a potential.
I think it'll be fine. We've had to change what we're doing on that one. Mm-hmm. It was meant to be a high-end holiday let. We were doing like a disability-focused holiday let. Yeah. So everything's been designed with, wide corridors, hoists and things like that. But as we kind of did the numbers and things ran on, time is a massive killer on projects, isn't it? You start just seeing the pennies and, actually pounds, hundreds of pounds, thousands of pounds dropping away every month. Yeah. There's a delay. We've decided that it's just a case of, look, let's just get it built. It'll be worth hopefully about 1.7, 1.8 mil when it's done, and just flog it. It's in Ponteland, so a nice area of sort of Newcastle, Northumberland. So fingers crossed, there will be money at the end. It just doesn't make getting there any easier, does it? Sometimes
no.
Speculate to accumulate and all that.
Exactly, that's it. And I think that's the process that goes into property, particularly from a bigger scale. And as you sort of start with the boring buy-to-let, so to speak, and work your way through to, not everyone takes that journey, but for those obviously like yourself that have, and it starts to become, a bit more on the line. It's slightly more stress, but you're probably used to that level of stress by now. I'm not sure on that.
No, to be honest, I think it's business and property. To be honest, I was listening to some podcasts on the way over of yours just to familiarise myself with a few of the new, more recent ones. And someone said, I can't remember who the guy was now. And I think as you kind of scale up, you need to get used to that level of pressure, that level of stress. And I've said it a few times. You got to get used to like the daily kick in the bollocks and just shrug it off and carry on.
Yeah.
Apologies for my language, but I've kind of run out of fucks. I've run out of fucks to give at the moment as well. You just got to roll with it. It is a lot of pressure, when you're doing a buy to let, yet you might have 10 grand on the line or something like that. I've got multiple millions of pounds hanging over my head at the moment. So yeah, you've got to get comfortable with being uncomfortable, I guess, if you want to scale up quickly anyway.
Absolutely. I think that is the key, isn't it? It's that being comfortable with being uncomfortable, because there is and I think as well, even if you take the easy path, sometimes it creates too much comfort, it becomes uncomfortable. So I think you kind of, if you're in it for obviously the reasons that you're in it, which is to scale up, create something significant, I think you've got to be able to live with that high pressure stress, and eventually obviously it's not going to be like that forever. Hopefully you make it to that point, but it's all about the process and enjoying that process in a really weird, messed up sort of way, I guess.
Yeah I think with the smaller projects as well, it doesn't make them any less painful. Things can overrun, things that you weren't expecting can pop out the woodwork. You might need a new boiler and stuff. The margins are still the same. If something goes wrong, something goes wrong. It just doesn't feel as painful. I guess when you get to bigger projects, there is the ability to absorb some of that. It's just you've got a few extra zeros on the end, haven't you, on these, when you've got 6 boilers or 6 services coming in and things like that. So yeah, it's... I guess the scale, it allows me to, hopefully it will allow me to get to where I want to be quicker. The numbers are bigger on the income and things like that. I've very quickly realised with doing the single buy-to-lets and stuff, I was splitting £200 a month income with a business partner. How many of those do you need to make a difference? Everybody's got that £2,000 a month limit when they start off, haven't they? £2,000 a month and I'll have made it, and no, that's not enough these days, is it?
No.
So that's why we got into bigger stuff. I want 1,000 plus hitting my bank account every month, because then I can scale quicker. I can get to that kind of that plateau, that nirvana of putting my feet up and hopefully not doing anything.
Yeah. Do you think you'll ever not do nothing or do anything?
I guess no, but if you enjoy what you're doing, it doesn't feel like work, does it? So I'm quite happy to sit back, just do the deal analysis. I like the hunt, the carving them up. My background's architecture. Making things work. That's what I like doing. If I can find things, pass it over to a team who I know, like, and trust, and they can develop it, and obviously I keep it at the end. That's great. I can do that from anywhere in the world.
Absolutely.
So that's kind of what I'd like to do.
So what sort of skill sets have you attained to go from doing the simple buy-to-lets to obviously the bigger scale projects now?
So I guess the architecture background does help. I've worked in architecture, planning, building surveying, what else? Structural engineering. So I guess it's spotting opportunities or not being afraid of problems. I always look for things, with problems, whether it's structural or maybe someone hasn't seen an angle in a planning perspective, E2MA, we've used that a few times. The listed building that we're doing at the moment, people are running scared, but there's a lot of opportunity in that. So the church that we're doing, that was 57.5 grand we bought it for.
Oh, wow.
It would be worth, fingers crossed, we got the valuation this week, but we had an off the record conversation. It'd be worth about 1.38 million. Wow. So it's that taking a chance on something that maybe people are scared of that can really bring rewards.
Yeah.
So that's what I'd like to think is my skill. The one in Wooler, again, it was on the market. It had a lot of, it'd been neglected for a long time. We managed to secure that for 100 grand, and that'd be worth north of 1 million, hopefully, when we're done on that one.
Amazing.
So yeah, a lot of opportunities where people haven't spotted them really.
Absolutely. And I suppose that comes from playing a role within the sector before actually getting into the property sort of.
Yeah, there's an element of that. I still think there was a little bit of imposter syndrome that I had to overcome. Just not believing in yourself. I guess when you just, you're CAD monkey, you're sat behind a desk and you're not doing it. It's a lot different doing the drawings for other people to actually having the purse strings, having to deal with the trades, being 100% accountable for everything that goes on. So there's been a lot of growth in myself, I guess, in order to get to that point and having belief that, God, everyone gets buyer's remorse, don't they? No matter what you're buying. So yeah, there's been a lot of growth to be able to be confident in myself to take on these bigger ones as well.
Absolutely. So in terms of, I suppose, the skill set that's kind of gone into the level of, obviously you've got your experience with the architecture technician, surveyor, etc. What's the kind of biggest difference that you've sort of seen in yourself? Because I know you sort of alluded to it there. I've had to, internally start to deal with more pressure, this, that and the other. What sort of coping mechanisms, or what's the biggest difference that you've sort of seen in yourself that's taken you from the buy-to-let stuff to doing the bigger stuff?
I would say probably management of people. When you're an employee, you're just accountable to yourself, really, aren't you? You've got a manager above you. It's that stepping into a leadership role, I guess. Having faith in your convictions, being able to trust yourself to make the right decisions, and then obviously leading people. I've still got a team of 4 people. And it's like when you have a kid, going from just looking after yourself and having to make yourself peanut butter sandwiches to being accountable and, looking after other humans. So I think that's probably the biggest step of growth, is stepping up into having like the one employee and God, oh my God, how am I going to make ends meet at the end of the month? To then, taking on like a PA or something like that. There's all of these little steps along the way. So going from that to, as I say, 40 people, that was with various JV partners and things like that as well. But that's probably the biggest step in the growth for myself. What's
the biggest lesson that you've sort of learned going to 40 staff, then reducing sort of back down to where you are? What was that sort of shift like?
Well, one of the lovely things is you don't have a wage roll of, multiple tens of thousands a month. It's a lot easier when it comes to payday. It's always funny, actually. I remember I was with my sister away with the families and stuff the other month in Scarborough, and she got to it was payday. Oh, yay, it's payday. And it's weird seeing an employee mindset versus a business owner. I was like, oh, fucking, it's payday. And she was like, yay, it's payday. And she didn't, she just doesn't see like me is putting me code in every 2 minutes, paying everyone, versus hers just like, oh, it just happens. It's in my bank account. So that's been a nice surprise. And then just, going back to a lovely team, it's a lot easier to manage when you have fewer people. The more people you have, it almost becomes like child-minded, I guess. All you do is you're further away from the stuff that you enjoyed doing. You just end up dealing with other people's problems all the time. So it's been great to get down to a little core team again who want to work. They like doing what they do, and we all like and trust each other. So that's been the biggest breath of fresh air, I'd imagine.
Absolutely. So let's delve into one of the 3. Well, let's delve into the church, really, because we've spoke about that a little bit. And where did you sort of find that deal? Obviously, it sounds like a great deal.
So I run a networking event as well. So that, as it's grown, has brought me
property thing. Is that
the property thing. That's the one. Yeah.
Shout out to property thing
over in Darlington. Yeah. So a little independent group, myself and a guy called 1.3million. We run that. And it does very well, to be honest. We sort of average between sort of 60 and 120 people. So depending on what time of year it is and that kind of thing. But just from being that guy at the front, I guess it's brought me a lot of opportunities. So all of these deals have been brought to me. So the church one was one of my business partners, Simon Folkes. He came to me and said, "Oh, there's this church in Barnard Castle. Do you fancy maybe having a look and we can do something together?" So we went and saw it, and that was my first, I guess, JV, my first commercial conversion as such. So again, it was a step up. I was like, "Oh my God, what am I doing here?" So there's a big learning curve there as well. So went and saw it. I think it was just before. Was it just before or just after? It might have been just after COVID. So we managed to play on a little bit of the pandemic fear to drive the price down. When I went and measured up, the designer who'd done some rough plans for the developer who was selling it, he'd undermeasured it as well. So when I kind of measured, I was like, oh my God, it's like 20 square meters bigger, each floor. So I can squeeze in 2 flats per floor rather than the one that this guy had done. So obviously I didn't let him know that.
Yeah, of course, yeah.
But that was my kind of tool to like, oh, great. So we knocked him down. I think he wanted about 120 at the time when we first looked at it. COVID was happening. Oh, the world's going to end and all this. He was a bit of a tinfoil. Well, not him, his missus, a bit of a tinfoil around the head kind of a lass. So that kind of played on that. Yeah. Managed to just say, look, we'll buy it, but it's going to be 57.5 grand, and you give us 2 weeks to complete. I think it took 3 or 4, but he was happy with that, and away we went from there. Really, I did start a building company to try and keep my costs down on that one. God, when we got going, I think we'd had a low valuation. You probably know how this kind of stuff works. You go for your development finance, and they always downplay it, don't they? So I think when we started off, we had a val of about 680, 650. Obviously, you can borrow a certain percentage of that. So we had about 450 grand to try and convert this church. We'd had a price via my then business partner, builder, for about 450. Like, yay, it works. Let's do this. Obviously, I didn't really check through it, just thinking the builder's done this. He knows what he's doing. It's not my background. Got going, and very quickly, well, not very quickly, I suppose, over the next 6 to 7 months, like, oh God, where's all the money gone? It just gone. And when we look back at the breakdown of this price, there was like 10 grand put in there for the strip out. And I think we spent 75. It was all of these little bits, the build aviator thing. I'd found out they weren't QSs. So they hadn't accounted for like 4 meter high ceilings. So their boards were like 2.4. So we've got all of that, missing material in the stud work, in the metal frames, in the plasterboard insulation, all of that. So very quickly it kind of ran away with itself. I think we'll be all in for sort of around about 800 now. But fortunately, we had faith in our convictions, knowing that it would value up a lot higher. So we just ploughed on. Thankfully, it's ended up around the sort of 1.3 to 1.4 million, and it pays everything back. But there's been a lot of the blood, sweat, and tears. Probably more tears when we've had to worry about where the money's coming from and that kind of thing. So fortunately, it's worked out okay.
And this is the reality of property right here. It's not all Lamborghinis and yachts and holidays. It is very much down and dirty. Yeah. When stuff goes wrong, it goes wrong. And it's about finding solutions. It's about dealing with the stress at that highest level, which is obviously what we alluded to before, and just coming out the other side. A, smarter, A, quicker, A, better. But it's, as that phrase is, when you're going through hell, you got to keep going. Yeah,
I mean, it's when your back's against the wall, that's when you get the most creative. There was a lot of lessons. I thought, my background's architecture. I thought I'd provided all the information that we needed to get an all-in price, and obviously that proved wrong. So the next scheme we adapted, again, thought we'd got it right. Again, it didn't quite work out, but the third one, fortunately, it's kind of there or thereabouts. We're about 5 to 10% over, but it's worked. But a lot of lessons in that first one. Unfortunately, it's valued up where it should do to save our shirts. But if we'd have overpaid for that, if we'd have paid 300-400, we'd have been well underwater by now, and not everyone would have been getting paid back. So it's lucky in a way. So you've got to be you've got to have a lot of faith in yourself to carry on pushing, because I think a lot of people, when if you've got a 640 val or whatever, 650 val GDV, you'd have just thought, well, that's it. It's never going to value up, isn't it? So we've had to keep pushing, and it's nearly doubled that. So
what's the reason that, I'm assuming obviously COVID price increases played into that? Is it the finish of that project?
I think when I do get it. Valuers, surveyors, they've got to be cautious, haven't they? It's their PI at the end of the day. So walking into an old dilapidated Methodist church and squinting and trying to see the end product is difficult. So they can only base it on, and I know they're going to be safe on the lower values in the area. So it's, no matter how much I bang the drum about, well, they're going to have 4-meter high ceilings. We've got stained glass windows there. We've got these vaulted ceilings here, there, and everywhere. They don't care. They want to see the end product. So it has taken this is the third valuation on it. So we had the first one, low val, second val came in to get more money to finish it off. That was about $1 million. And then obviously it's progressed a lot further. We got paint on the walls and that kind of thing. Now I say we're nearly finished just dressing it. And then that's obviously where the extra upticks come from as well. So it's just, just making them aware that it's not your standard 2.4 meter high square boxes that are purpose built. It is a conversion of a grade 2 listed thing. You're going to pay a premium for that because it looks so unique, really.
Absolutely. So just on the finance piece then, so it was, so I suppose to explain development finance to people, for easy maths, if your GDV is £1 million, you can get, I don't know what it is anymore, 70% of
60 to 70%, isn't it normally? Yeah.
So let's say 60%. So you'd be able to borrow up to 600,000 on that project, but that comes in trenches. So if you purchase it at 200,000 and you've secured it at 300,000, let's say, again, easy maths, or 400,000 and you're borrowing 75% at 300,000, you can borrow up to that 60% mark, which is obviously 300,000, but you'd have to spend 100,000 on the project to get that trench drawdown to then obviously proceed with the project. So you've kind of gone from the 600,000, the initial loan GDV, obviously on that, borrowed 60% of that on your trenches. You've then refinanced to obviously pull more to continue the project at the £1 million. And now are you dev exit or are you sort of continuing?
Yeah, it'll be onto a more traditional product. So as much as a traditional product is commercial finance, basically.
Yeah.
So that's an element of, because it's Airbnb we're doing as well. It's the bricks and mortar.
It was
plus,
a buy to hold, this one was?
It is, yeah. This is, it should be good for cash flow. Obviously, interest rates have risen quite substantially since we started. So that has impacted the cash flow or potential cash flow. But yeah, when it's done, it'll be 75% loan to value. There's an element of the bricks and mortar, which is about 1.2, and then an uptick because of the commercial income from the Airbnb apartments as well, which gives it that little extra push.
Sure. So it's sort of a hybrid kind of product.
It's a hybrid, yeah.
Perfect.
But I think there's an important point there for anyone who's getting into dev finance. Yeah, it's great. You've just got all this money agreed. You can do these projects. You need to be able to fund the first. You need to do the work and then get it paid back. I think a lot of people don't appreciate that.
Yeah.
So a lot of these courses that maybe pump out, you can do it with no money down. You maybe can, but you're going to need someone's money to pay your first months. I mean, God, we had to wait 3 or 4 months for the first drawdown. We were really like on the bones of our arse that first bit, because we were like, come on, give us the money. We've got, money in. At that time, it was my construction company, but I was having to pay the wages out of my own money. We were at the limits on our merchant accounts and all that kind of stuff. There's money left, right, and centre that we had to repay. It was very touch and go.
Yeah. That's the reality of drawdowns. People don't, I think, realise how. They think, if I've purchased it at 300,000 and I'm getting 600,000, then I'll be able to develop it out easy peasy. Either you need a really flexible contractor that will foot the bill for the first 2 to 3 months, and that's if you find that individual. Then you've got to take the drawdown. It's got to be to a certain stage, whether it's we need to get to first fix or foundations, or depending on what the project is, and then we'll give you X amount, and then that's on the basis that the surveyor comes out and actually values the work at that amount that you need, because the surveyor might disagree that you've spent 70,000, but you can only see 50,000. I say he, she. The surveyor only values at 70,000, so then you've got a £20,000 deficit that you need to find from somewhere. Yeah. So it's not always, I suppose, straightforward as people make it out to be, and it's understanding those intricacies that do go into the finance, the structures, the end result, the fact that valuations might not come in necessarily where you need them, and it's finding that balance, which I suppose over time, does it get easier? I don't think it does.
No, I mean, just to sort of elaborate on a few of them. So like your fees and things like that, sometimes you can't put them into your development finance facility. So that might be your architect, might be your structural warranties. We've been really caught out, I guess, by utility connections. You know, you budget maybe 1,500, £2,000 a connection, but all of a sudden they've got to dig up half of Barnard Castle or something like that to get your connection in, and it's now 30 grand or something like that. So these are large chunks of money that you need to pay up front that you might not even be able to claim back. So again, just be prepared. It would be a lot easier if you had a bit of money in the bank. I've done a lot of this with other people's money. I guess my input has been the time and the effort, but God, sometimes I'd sort of look back and think, God, I wish I'd just had 200 grand in the bank, 250 grand, and just done it myself. It would have been a lot easier. But yeah, there you go. We've got there in the end.
Exactly. I think that's it, isn't it? I think you've got to use those resources, particularly in the early stages, if you've not got that resource yourself, and to sort of get to that stage where eventually you can go, yeah, I'm just going to put 200 grand into that, just avoid any headache with anyone else. And if it fucks up, it's my fuck up, no one else's. So I can agree with that point for sure.
And another one is skin in the game as well. And I never used to appreciate that really. Like, why do I have to have money in the game to do this? The lender will always want that as well. They want you, so normally you'll have to own the asset outright or have a chunky deposit in there or something like that. And I didn't get it. It's only more recently when I've been dealing with JV partners who maybe haven't got as much invested as myself, that you think, yeah, I completely get it now. Some of the business partners where things have gone wrong, they can just walk away if there is no skin in the game. So it is quite a powerful thing. So I do appreciate that now as well. Why people like Roma, whoever, they want that as well. It is security for them.
Absolutely. I think, it's not just coming off of the back of a course and thinking you can raise all the money. It's understanding and that is the reality of it. What have you got to lose in this scenario? Because, like you say, if you've not PG'd anything, you've got 100% finance, borrowed from friends and family as well as a lender. Not that would ever happen, but in this hypothetical scenario, you've literally got nothing to lose. And even if you're just starting out and you do PG all that and you go bankrupt, well, I've got a Nissan Micra and I still live at home with me mum and dad, sort of thing. So you kind of, you've got to understand that when it comes to raising money, borrowing money, wherever that comes from, the people that should be lending it out, and this is to also a message to the investors out there that are trying to look for people to invest money in. It's important to understand because PG means nothing if you've got no assets to back the PG up. It's understanding what the risk is, what that individual has to lose in this scenario, and then how does the deal fit together when it comes to worst case scenario, which is, in your case, we needed another 400 grand to get this project finished. And thankfully, you've managed to do it by refinancing, pulling money from your own pocket, which obviously not everyone's in that position if they're borrowing money, and making sure that you can deliver the project as you said you would at the beginning, which is not straightforward.
No. That 9-month project is now getting on to 2 years as well. So, I think I said the cost, the time, impact of this, every month that goes by, you've got another round of interest costs, another round of holding costs. God, we got a project at the moment, it's not doing much, but the scaffold's costing me probably $5,000 a month. It's all of these death by 1,000 cuts that don't get accounted for sometimes. So any delays that happen are expensive.
Absolutely. I think people underestimate that as well. Certainly, if the bridge goes over another 6 months, it's, depending on what it is. I mean, for me, I've got a project at the minute that's costing me about $1,900 a month that's still in planning, still waiting for it. And you've got to, fortunately, we're in a position where we can afford it. But if I was 5 years ago and I had that deal, I'd be like, I don't think I'm going to be able to pay this month.
Well, there's a good one as well. I mean, if you're going into deals with planning, make sure your bridge is long enough, because planners don't care anymore. No. That 8-week period, that's not even a guide anymore, is it? It's like, I didn't get round to it. Sorry, I'm off on my holidays now. Yeah, I'll deal with that in 4 weeks when I'm back.
I don't even know why they put an estimated date on the planning portal, because it might as well just say anything. It might as well say 2040, 2040 rather. But I think we've been in planning now 15, 16 months.
Wow.
Hopefully got a decision in 4 days. So.
Right.
But I'm not holding my breath until then.
Unless they come back and say, I need some further information. There's another 21 days.
Yeah, apparently I've been waiting 2 months for a tree preservation order, but that they could have got from a solicitor, but that's another story in itself. But anyway, that's people don't think about this. They just think, it looks dead easy. They make it sound dead easy. Social media says it's easy, so like, I'm just going to go for it. And it's not always.
No. So I guess with that, like if you can, and this comes down to negotiation and people skills as well. If you can negotiate a delayed completion with the vendor and things like that, even if you pay slightly more for the property afterwards, it's probably, like you say, you're paying £1,900 a month at the moment for bridging. It might have been better to maybe negotiate that way. You know, we've had a few deals that we've done that way as well in the past. So yeah, you've got to keep all your options open with this stuff, haven't you?
1,000,000%. Yeah. And you've got to make sure you're working to a decent margin as well. You know, you can't be thinking, oh, it might be 10%, but that's still, 10% of £1 million, 100 grand, but that 100 grand can
that's
go
not,
in an instant.
not enough.
Yeah.
30-40% at the minute.
And the rest, I think. Yeah. No, good stuff. So I guess for the listeners that, starting out and sort of wanting to get to where you are in terms of the 3 bigger projects that you've done this year over the last couple of years, what key bit of advice would you give to those individuals?
Be prepared, I guess. So don't just jump in two-footed. Do all the research you can before you get there. Maybe try and see if you can do, the buy-to-let refurbs and things like that, grow steadily. I see it on a lot of HMO things where people are coming off of, they've just got a job, they've done an HMO course or something, and then they jump into managing a commercial, 9-bed HMO or 9-person HMO. And you think, well, you're not even decided if you like one tenant in a buy-to-let yet, and you're going into 9 people in a very intense environment. So, it's learning whether it's right for you. Spend your money on buying a buy-to-let rather than spending 20 grand on a course or something like that. At least you've got something you can sell if you don't like it. And then use the right people. I think as I've grown, I've tried to control everything and maybe get my fingers into too many pies. I think I've found using the right tool for the right job or the right person for the right job and paying them for it is probably a lot more beneficial, a lot easier, a lot quicker than trying to learn and do things yourself sometimes as well. So if you do want to scale quick, just realize you're going to have to pay for the privilege of doing that. You're going to have to pay for people's advice, people's time. But if you want to do it yourself, just learn slow, I guess.
I made that mistake pretty early on. I was like cheapest quote, trying to batter people down on price, and you end up with the worst people to work with. Because
2 years on, you're still doing your back to brick, 2 up, 2 down.
Yeah, exactly. So I think that's part of the process to mature into that and understand that it's not just about what's the cheapest price you can do. It's all about the bigger picture. Can I save a month by paying a little bit more, but what's that going to save me on my mortgage or my bridge or, the delayed costs? Is that going to have a knock-on effect to the carpets or the decorator? And you've got to think about it from a bigger perspective rather than just the cheapest price. Because I had a outright cowboy builder to begin with because he was the cheapest price, and it turns out that he wasn't able to do any of the work. He was just saying yes for the sake of saying yes and didn't know what he was pricing for, ran out of money, was giving more money to him to try and prop the project because he was like, I've run out of money, and it was just an absolute disaster. I think we were both as bad as each other in that scenario. I was inexperienced, didn't know what I was doing, but I was still cheaper than some of the courses that are out there. And the lessons that I learned, I apply now, and it saved me God knows how much in saved time, money, resources, stress, everything else in between. So
I think everyone has one of them projects or multiple of them projects, should I say, but it's those exactly that. If you're starting off, you need to go through that, I think, to realize that sometimes it is worth more to, when dealing with builders now, if they've got a contracts manager, it just means they're a bit more professional. You're paying a little more in their admin fees and things like that. But generally, they're a more professional outfit. They're going to take away the burden maybe of herding the cats. It's on them, isn't it? If you get liquidated damages put into a contract, there's another one. Make sure you have a contract. Do a lot of the work up front on the design. Try and get as much into a spec and things like that as you can, because that's going to save you a lot of money in the long run. Because everybody assumes. I always say, like, it all comes down to the door handles, the plug sockets, because a builder will just go and price on the crappiest, but you had a vision of brass or something like that. Oh, well, I didn't price for that, and that's where the variations creep in. You weren't expecting that. It costs you a lot more. You end up underwater. Have you got the money to absorb that? So yeah, I mean, I think anyway, with the bigger projects, you're dealing with more professional outfits, bigger teams. It's not a one-man band who's juggling 16 different refurbs and wants to come in at 5 o'clock on an evening on a weekend and all that kind of stuff to do it. Obviously that, as you said, holds up your plasterers and things like this. There's a lot of moving parts. If you've got a good PM, a good set of tradies who've maybe got a contracts manager and they're doing the cat herding, that can save you a lot of time, which accounts to money in the end of the day as well.
Absolutely. I think it comes in stages. I think if you're doing a kitchen refurb and a bathroom on a little buy-to-let, then obviously you wouldn't go to that sort of extent. But when you certainly start to get to 100 grand plus, maybe even between 50 and 100 grand, having a PM, contract manager, making sure you've got the right contracts, you've got the right contractors in place, I think that's where you really need to be on the ball, because one slight delay has a huge knock-on effect, which the financial burden of that knock-on can be detrimental to the bottom line and where your exit is and what that potentially looks like. So I think it's important to understand where you sort of sit on that scale. And I think that's part of leveling up and taking on bigger projects. It's finding the right groove, I suppose, with the people that you're working with, obviously what you've sort of alluded to. Yeah.
And I guess it depends what you're doing as well, because I remember when I started out, I was working full time, doing it on the side. I made the mistake of calling myself a project manager on our third or fourth project, and I got completely hung out to dry by the builder because I was working. I think 5 days a week initially, went down to 4. But yeah, when anything went wrong, when the materials weren't on site, it was my fault. I was like, God, I didn't realize this was what project management was, and it was a right pain in the bum. So if you're not prepared for that, and you say the wrong thing to a builder, they'll completely stitch you up. So you've got to be careful from day one, really.
Absolutely.
And if you're working full time, just kiss goodbye to any social life or spare time that you might have with a family. It's a hard slog, isn't it, if you're doing a back-to-brick refurb?
Absolutely. Well, hopefully we haven't put people off today.
Get in the property. It's lined with gold, the streets.
I mean, obviously there are upsides to it. There's the freedom it creates once you get out through.
I was going to say, when does that come?
Eventually. So we hope anyway. There is profit. I've built my career and my wealth on property, and if you get it right, there is certainly good opportunities there for people, but you've got to go through the stepping stones. You've got to make mistakes. You've got to just keep trying and pushing, and you've got to be really cut out for understanding that it isn't just like what some of these property trainers make it out to be. It is
delayed gratification, isn't it?
That is
I think the one of the, there's a few sayings I love, but people overestimate what they can achieve in a year, but underestimate what they can do in 10.
Yeah.
So I'm 8 years into my journey, and I'm still not where I wanted to be. But in 2 years' time, I know I'll be there. So it's just making sure it isn't going to happen overnight. Yeah, some people do it. I imagine you see them on social media, but it is a long slog. It will be hard work. Just be prepared for that, really. And if you can deal with that, you'll make it.
Absolutely. Great stuff. Well, I think that rounds the episode up very nicely. If you want to follow the journey or find out about the property thing, where can they go about doing that?
So the property thing on Facebook is probably the best place to find us. It's the Property Thing group. That'll take you to our little online community. Keep up to date with all our events and things. Myself, just type Anthony Boyce into Instagram, into LinkedIn, Facebook, and I'm sure you'll find me somewhere.
Super. Great
Brilliant.
stuff.
Cheers, mate.
Thanks for making the trip over today as well. I know
pleasure.
It's a bit of a journey from the northeast, but I appreciate you coming over.
No, thank you. Thank you for having me.
Good stuff. Thanks again for tuning in today. Obviously, there's a lot to unpick there, and hopefully we haven't put you off investing in property. There is a lot of upside to property, the freedom, the business opportunities, the potential increase in your wealth. It's all about the journey, though. It's understanding what goes into that, and hopefully you can get an insight to that with today's episode. So again, if you're listening on the audio version, please do leave a review. It certainly helps. And again, on YouTube, please do like and subscribe, and we can continue to get amazing guests like Anthony today. Thank you very much. We'll see you again soon. Bye-bye.